Making a quick video on the US 10-year Treasury, which is the main item that has an impact on the mortgage interest rates. So in the last video I did, I went ahead and I added these channels here, the red channel up top and this green channel down bottom, to show what I was anticipating would happen. So as you can see, we are in a downward trend coming off of this high up here at the top. So I'm just going to go ahead and just drop a trend line right here so you could see how we're looking. And you can see what happened here is that we hit the top of that trend line on the way back down. Let me go ahead and delete these, get that out of the way. See, we hit that trend line on the way coming back down. Let me go ahead and clone this, bring this down here. So if I drop this down here, you'll see that we also have a trend on the way down. So we have like a little, just a little channel that is operating inside of. So this is the channel that I'm watching on the way coming down. So right here, let me zoom in a little bit. You'll see where we came off of this little green section down here, where we dropped down, and then we started to move back up. And then now we're hitting the top of this channel coming back down. And it's also simultaneously hitting in this red zone that I highlighted as well, where we had some price action back here and in here. Let me go ahead and switch this up to the daily chart. So now each one of these candlesticks represents one day. So the one right here I'm looking at is the one for today. And if this holds up, this could be a sign of a reversal for us to start to move back down, because we had this move up, which had attempted to go up higher. But now we see where, whatever players are buying up bonds are stepping in and buying up bonds. And as they buy the bonds, the yield moves back down. I won't go too deep into the explanation, but it moves the opposite of the way stocks move. When there's buying in the bond market, it pulls the yields down. When we don't have buying and we also have selling, then it pushes the yields up. So if no buyers step in, the yield has to keep moving up to make it more attractive. So then that's when institutions, governments, and so forth step in to buy these bonds, and then they collect that yield. This is a 10-year Treasury. If they hold this for 10 years, if they're buying this right now, they're going to make 4.29% for the next 10 years fixed interest. All right. So you see now zoomed back out. See, we have this channel, very, very clearly pronounced channel. So what I'm looking for again is for this thing now to start the trend back down and start to move back down into this area. On the way down, just like on the way up, you're going to see it's going to zigzag. We're not going to just have a steady shoot up unless there's some crazy situation that happens. Typically, you have a big day like this. Something happens, something significant in the news typically happens when you see a big candle this way, big candle there. So right now, this is what I'm looking at. We're topping out. This indicator down here at the bottom is showing me that now we're getting to the point where it's time for this thing to turn around. You'll notice back here when we started to hit in this area that that correlated with this peak up here. And then we moved down. Same thing here up at this top there. Then we moved down. Same thing here, there. Then we moved down. It's not going to be perfect. As you can see, these peaks are at different levels. But typically when we start to get up into this range right here, that's when I'm expecting that we're going to start that move back down. We can go sideways for a little bit, but I am expecting overall that this move up looks to be more than likely over, unless there's something that comes out in the news, some economic data, some jobs report, something that happens with inflation, manufacturing. There's just a variety of different things. Like, for example, the port strike was inflationary, it got resolved, but we didn't see the move back down like I was hoping. On the daily now, what we want to see is this red with this long wick at the top, right? And this just represents it moved up and then it got bought. They started buying and now it's bringing it back down. So what we want to see here is we want to see this close, the bottom of this close below the bottom of the green one from yesterday. That would be beautiful. So that would mean, that's definitely setting up for us to move back in the other direction. At most, we might see a couple more attempts to push back up. But if every time it attempts to go back up, it gets bought up, these bonds get bought up and it starts to push it back down. And that means we have some buyers now up in this range that are ready. And they're stepping up and they're buying bonds in this range. And they're going to push that thing back down and start to pull those mortgage interest rates back down. Definitely a good sign, because it was it's just been brutal coming off of this 3.6 back here, like around September 17th. It's just been up, sideways, up, a little bit of sideways, up, sideways, up. So now we want to, we're hoping that this is the last up and then we can start to trend back down. We flip it back to the weekly and then get this wrapped up. So one more time. Only thing I would say right now that's a little bit concerning is when you look at this on the weekly time frame, the strength of the move really hasn't, maxed out. So, if something were to happen, it does still have some room to run, from a weekly standpoint. But, I tend to believe that we're probably going to just move within this trend, to be honest with you, because there's other things that are supporting that. The Fed is cutting rates. We're going into a different part of the cycle. Inflation is slowing. So, all signs are pointing to a trend that should now start to, continue back down. And this is a downtrend. This is a clearly pronounced downtrend. We hit a high, then we came back down, and then we hit here. Then we made a lower high. Then we came back down, and this could be the next lower high. So high, lower high, lower high. If it continues to move up and down this side of this channel, that's exactly what you want to see until it breaks this thick white line and then really starts to just capitulate down. That's what we want to see, and that'll be great if we can get that, because that'll bring much lower mortgage interest rates over the next 12 to 24 months.